All right, it's not very often that Devan Kaloo, the head of emerging markets, Aberdeen Asset, joins us right here on ET Now. Thanks very, very much for being with us. We're trading live, and so I'm not going to waste much time and straight go on to the questions that matter. India has underperformed EMs in 2016. Do you believe it's going to outperform in 2017? And if you do, what do you think will the levers of growth or the reason for your faith be?
Well, I think if we look at 2016, the big issue that affected the markets was that it had done very well in 2015 and it lagged relative to everybody else. But then towards the end of the year, we saw the issues with demonetization and the consequences that's having for economic growth and profits. Our view is that demonetization is a good long-term gain for India, and as a result, we see through that. So I think by the second half of this year, India will start to do very well, and there are a number of drivers for that. One, the economy will start to look better, profits will look a bit better, but also perhaps most importantly, some of the reform measures are beginning to kick in, and I think that stands for a very good story in an uncertain world.
It's a good story, and you've been a long-time believer in this story, but one is tempted to ask you that expectations did run ahead of reality, and you've mentioned this in the past as well. And typically, obviously, reality never catches up, and so they couldn't deliver, and which is why valuations became very expensive. Do you believe valuations have corrected? Are they at a more pragmatic level than they were in the past?
Yes, I believe so. I think there's two ways to look at valuations, an absolute and relative. And in absolute, yes, the markets come down a little and things look a bit better than they were. But actually on relative terms, India looks a lot more attractive than it does versus a lot of other emerging markets because of the reasons it's underperformed. So yeah, I think valuations look pretty attractive today, particularly if you're looking to build any sort of longer term position for the next 3 to 5 years.
You know, you spoke about earnings and you said how profits will perhaps be impacted and growth will be impacted by demonetization. I have more detailed questions there. I'm going to go to that in just a bit. But I think what everybody wants to know is when will there be an earnings pickup in India? What will give earnings a fillip? What, according to you, is going to give earnings a fillip? The government is trying to spend. Do you believe tax cuts could boost that? I mean, what do you think will turn around the earnings, which haven't really seen a fillip so far?
Yeah, I think if you look at the Indian market, perhaps the one disappointment has been the time it's taken for earnings to recover. But I think there are a couple of things that are coming through here. First, the benefits of lower interest rates are eventually going to kick through. The increasing confidence in India's future, led by both corporates as well as consumers, will actually get companies and people spending again. And perhaps most importantly, as we get clearer that the government is really committed to reform and delivering, we will see a pickup in overall sentiment. So it's an issue about sentiment, I think, in the short term.
It's always about sentiment, is it not? But, you spoke about sentiment and you also spoke about spending. India was this big domestic consumption story. Many people believe that demonetization perhaps has hit that consumption and numbers tell that story. When do you see that hit consumption bounce back? When do you see things return to normalcy? And more than that, do you believe that's going to delay the fillip in earnings that we just spoke about?
Yes, I think it will delay it. So we will have to look to the earnings coming through. But I think the most important thing to remember here is that it's delayed consumption, not killed consumption. So sooner or later it will come back. And when it does come back, I suspect people will be surprised at how quickly it does rebound. And in that regard, we'll probably see, as I said, in the second half, earnings being revised back up because they're currently being revised down for the impact of demonetization.
You spoke, because you said demonetization as the last word in your sentence, I'm going to take a cue from that. Demonetization happened, and like you say, long term, this is going to be transitional for Indian economy. It is going to be transformational for Indian economy. This is perhaps a transient impact we are seeing. But amidst the demonetization debate, I'm not going to get into the merits or the demerits of it. The RBI's reputation has taken somewhat a hit, and many people believe that the central bank in India was really revered. It was considered to be very impeccable in that sense. Do you believe its credibility has been eroded to a certain extent of how it has been a dormant player in this entire process, hasn't communicated much, and there's been so much back and forth, which has really taken the sheen off what could have been a game-changing reform?
I think if you look at the bond markets, they seem to have a very high opinion of the Reserve Bank of India. So I would leave it at that. We believe they're doing a decent job, and certainly relative to a lot of other central bankers out there in the world, very credible.
How would you read the transition from Raghuram Rajan to Urjit Patel? Because many people believed it was a vote for continuity. Still others believed he's an inflation hawk. Do we need a growth warrior? How do you read the transition and then, of course, the leadership at RBI?
I think one of the things that we've learned in the emerging markets over the years is that inflation has to be brought under control. And ultimately, that's the bedrock for any sort of pickup. And as a result, the central bank in India, as said, as the focus is appropriate.
I'm just going to turn focus to your holdings before I go on to the big picture questions about reforms. Your top sector holding in India is consumer staples plus banks versus benchmarks and other EMs, of course. What about banks? What about the NBFCs? What about insurance companies in India? You hold about 3.7% in HDFC. There is a lot of doubt. Can HDFC hold ground in a market as competitive as that?
I think that's a fair comment. I think certainly as the banks get better and perhaps start to recapitalise, which is one of the big hopes for the state sector banks, then we will see increased competition. But then ultimately, if we see greater loan growth offsetting that, I think we'll all do very well. But within that, of course, we think HDFC is one of the best banks in India and has a fabulous track record and great management. So we're comfortable. But yes, recognise that potentially in the short term there is competition. But the growth prospects are fantastic.
But you do keep focus and you do keep faith in banks despite the fact they're saddled with bad debt. Some of the focus has been taken away due to demonetization. You still are a believer in Indian banks?
Absolutely. I think when you look at banks, they're very dangerous vehicles, ultimately because they're very leveraged vehicles. So you should always be, when you're looking to invest in banks, buying banks which manage their balance sheet well, are prudent lenders of money and have a proven track record of doing that. And if you find that, then these are fantastic vehicles on the underlying growth in India.
Your other big holding is ITC. What do you like about that company, the diversified FMCG model? It's one of the cheapest in that segment. But many people believe the overburden on tax as far as cigarettes is concerned is a worrying sign. What do you like about ITC?
I think when you look at cigarette companies, first and foremost, there's this idea about premiumization, which I think India will go through just like everyone else. And companies with brands like ITC will do well. But we also like the fact that it has been diversifying its business and continues to do a good job of allocating capital. So ultimately for us, we think it's one of Valuations because it is one of the cheapest multinationals out there.
And does the burden of tax on cigarette not concern you? Do those clouds of, do those clouds of significance sometimes shroud your judgment on ITC?
I think you have periods of concern in India and indeed all countries with regard to tobacco and cigarettes. But ultimately what we've seen is that there's nothing new under the sun, right? So we understand what the regulatory risks are, we understand what the tax risks are, and there is offsetting factor. And the offsetting factor is that the more that you hit the cigarette companies, the less the taxes that they gather. And at the same time, you have issues about the cigarettes which are not being produced legally.
That's right.
So I think there's a balance to be struck, and ultimately the balance is in ITC's favour.
Some things are in favour of ITC and HDFC, but what is not finding favour with you is Indian IT, and you're still underweight on that. It seems to be the big story for a lot of other people. What do you believe is the issue there? TCS, Infosys, is there doubt about leadership? Are there concerns about that?
I think certainly there's a lot of noise, and the recent changes in management in Infosys, TCS, and indeed some of the others has created uncertainty. But I think the wider issue for the software companies remains whether or not demand is going to pick up and the concerns about protectionism perhaps in the US impacting them. I think ultimately though we're confident in the longer term outlook, but a little cautious in the short term.
A lot of people here in Davos and otherwise believe that the world is perhaps beginning to see the first few signs of monetary policy going back to where it was, to normal, especially with the US Fed and other central banks easing off and waning away the stimulus steroids. What does this mean for emerging markets, particularly India, and especially in reference to what the US Fed will be doing and has done?
So I think there's a couple of things there, and that's a very big topic because we're going from unorthodox monetary policy to unorthodox fiscal policy, and that carries some risks and potentially great opportunities as well. I think ultimately we need proper pricing of capital and interest rates need to go higher for that. And if that happens, then we will start to see who's making the good returns on capital. And in that regard, I have no concerns about India. I think India companies make a very good return on capital, very disciplined, and ultimately are a good long-term investment for anybody.
You've been a long-term believer in India, and so I'm tempted to ask you that emerging markets basket, everybody says India is the darling and India has its strong fundamentals. If it is so good, it must have either done the returns, or do you believe there's still to make?
I think there's still plenty of returns to make.
Donald Trump, and you've written extensively about it. There is a lot of fear, a lot of concern, a lot of speculation of how this is going to impact the world. His first few statements are very, very protectionist. It almost seems as if the US is inward looking. What do you think will be the impact of Donald Trump's presidency, if it were to be what he's saying, on markets like India? We have huge exposure to India, the US markets, whether it's our pharma, our IT, and other segments like that.
I think actually on a relative basis, India is more insulated from the potential risks of Donald Trump. But I think the concern that people have with Donald Trump, in particular with regard to emerging markets, is that he's going to either stimulate the economy significantly so that interest rates rise and the dollar rises,
That's
which
right.
creates a problem, or worse still, implements protectionism. And in that regard, India actually stacks up quite well in that it's
In
less
both scenarios?
in both scenarios relative to a lot of other countries in emerging markets. So I think if your concern is what the negatives that Donald Trump could bring, then actually India is a relatively safe haven within emerging markets. But that said, emerging markets would struggle overall.
Indeed. My last question to you, and that has to do with the reform pace in India. Things were looking very hunky-dory, and investors like yourselves were very euphoric on the market. But some of the sheen has been taken away, A, because the reform process has slowed down. We are a very noisy democracy. There's been a legislative logjam on many reforms. So 2 questions there. Has that taken some of the euphoria away, the slow pace of reforms? And what are the reforms that will instill that faith back? Are there any ones in particular that you would want the government to walk the talk on?
Well, I certainly think the reform around the GST and the proper implementation of that would be great for India longer term. But I do think that the better social welfare transfers and maybe even low-cost housing will be a big underpinning for potentially stronger growth coming out of India. So there's lots of things that the Indian government can do, but ultimately it's to allow companies to get on and do what they do best, which is invest, grow, make profits for the benefit of everybody. And in that regard, that means less regulation, not more regulation.
Do you see fear, and do you sometimes fear that India is perhaps going down the way of over-regulating?
I think with Prime Minister Modi, we've seen reduction in regulation. And I think I can only hope that that trend continues, because that is ultimately the best thing for India.
Indeed. Thanks very much for speaking to us right here on ET Now. Devan Kaloo in conversation with us right here in Davos.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.